I believe what's truly happening is prominent asset managers, hedge fund managers, and mutual fund managers who've been around a while, possess some experience, and haven't disregarded the last 10 to 20 years and gotten all jubilant due to the stock market. They're slightly wary of what they observe in the stock market. Various valuations simply don't add up. The longevity of the market is puzzling. The recent sharpness alarms them because it's a kind of extreme action that typically ends very negatively in the opposite direction. Hence, I think there's some intelligent money out there that's expressing, hey, I won't exit the stock market, but I'll transfer some funds out. 5% here, 5% there. And I believe what they're doing is it's shifting into those asset categories, the safety of T-bonds, gold and silver. I believe that's why those two markets are currently moving in unison. Don't anticipate it to persist. Eventually, yes, the T-bonds will decrease in price and rise in yields, because if inflation continues, which we anticipate, then you'll face repercussions if you hold on to the T-bonds. Frankly, I believe we're reaching a peak right now, and I've been sensing that we're in a peaking process for several months now. That doesn't mean it can't rise. I mean, you're up until you're down, right? Joe Grandal said that. However, we have figures beneath the markets, both on the Nasdaq 100, which is our primary index. There's no doubt it's been the primary index. It's outperformed everything. The top 5, 6 stocks in the Nasdaq 100 constitute over 50% of its weighting. We all recognize those symbols: Amazon, Apple, Microsoft, Google, etc. They also make up probably about 25% of the weighting of the S&P 500. So, as these indices have surged, it's not because of all the symbols within the index. It's mainly due to the dominance of the leadership, and hence, the focus on the Nasdaq 100 because that's where the primary weight lies. We observe figures below the S&P and below the Nasdaq 100 that aren't too far down there. Now, considering we've had a dozen-year upward trend, which is exceptionally unusual, and much of that has been vertical, it's unsettling. And it's concerning because if you're a chartist and you're examining, let's say, a weekly or a monthly price chart of the S&P or the Nasdaq 100, and you glance at your screen, attempting to determine where you think it breaks, trying to draw a trend line, it's almost impossible. You might sketch one, and then it ascends at a steeper angle. We have to sketch it again at a steeper angle. It's like multiple lines. So, no line intersects 3 points. It's just a curve. The challenge for the price chart technician at this moment is that when the downturn comes, there's no consensus on where, oops, it broke something. And when you lack an understanding of your position on the map, emotions can take over, and panic can follow. So, it's going to be an intriguing game this year. Many events are going to unfold this year. Not only the inception of events, but actually the culmination of several of these shifts. We tried to remain focused. I mentioned that I read the front page of the journal today, but I don't attempt to pay attention to others' opinions or other factors that might be at play here. There are significant factors at play, big fundamentals in play. We all understand that in our latest weekend report, we featured a Fed fund rate chart extending back about 30 years. I mean, you merely look at the absurd thing and you say, no wonder the stock market has ascended vertically for a dozen years, 0, and for 10 to 12 years. No wonder the stock market was overpriced. We've had inflation for numerous years. It just didn't enter commodities until asset managers once again adjusted their preferences from stocks to undervalued commodities that bear less risk and probably more reward. And indeed, that's what's happening. So now we have what the public and the Fed term as inflation. Actually, we've had it all along. It's just been evident elsewhere in a vertical stock market. I believe that bubble is going to implode. Not that the inflow of money from the Fed or the ECB or the BOJ will halt. It's simply going to redirect because people won't invest where the Fed would prefer. Now, what will the central bank do when the debt markets they must safeguard are deteriorating? Will they reduce stimulus? Will they hike rates? I doubt it. And I believe gold understands fundamentally that the central banks of the West are ensnared in a historical dilemma of their own creation, and they're plunging along with their policies. I believe they're spiraling downward this year. Where will funds prefer to gravitate? As has been stated, cash is inadequate. A major asset fund manager said that some months ago, and he's spot on. And he's not even the gold advocate. So, I believe the public is becoming cognizant of this. And then we arrive at another intriguing issue that's been debated on many financial channels recently. Actually, I observed something on it today. Bitcoin or gold? Well, we gauge them both, but we've been monitoring the spread relationship between the cryptos, particularly Bitcoin, and gold and Bitcoin and silver, because we're betting on silver. We believe silver is going to considerably surpass gold. Silver will outstrip gold in terms of percentage gains, but that spread is quantifiable. The relationship of the valuation of Bitcoin versus silver. Evidently, since Bitcoin's inception, it's been erratic. People can't quite assess its worth. It has unquestionably outperformed gold and silver in an irregular but upward manner, very intense, much like its price. Those charts, to us, appear fragile. In other words, it seems we could be nearing a point where Bitcoin, in a valuation sense, relative basis, might peak against gold and silver, and subsequently, they might replace it as the haven for safety reasons. And it wouldn't surprise us if, okay, the shift has occurred. It's time now to move away from Bitcoin and into gold and/or silver, preferably silver. Now, that doesn't imply Bitcoin has to decline. It just suggests that Bitcoin will alter its relative performance such that silver will surpass it moving forward. And I believe that's about to transpire ultimately. This time, I don't think there's an escape route.